Hi, this is Harlan Merriam.
I'm Mike Jacobson.
We're with Attune Investments, and we've been looking with you at the FIRE movement and your participation in that so you can get financially independent as soon as possible so you can retire early. And we've looked at a variety of ways to do that and multiple assets in your investments. One of our favorites is multifamily or apartment, owning $1 million apartment complexes as part of a partnership, and you can do that. It's called a syndication, and today we're going to walk you through the life cycle of a syndication to give you an idea of what to expect.
That's right. Thanks, Harlan. And as a reminder, these syndications offer opportunities for both passive and active investors. So the general partners, such as Harlan and I, are the active investors, and then we have plenty of room for other people to be limited partners or the passive investors. So the focus here is to learn how to participate as a passive investor. And so we'll start with the first step is identifying and qualifying investors. So the general partners, such as Harlan and myself, initiate the syndication process by identifying potential investors. We want to assess whether the investors are accredited or not accredited. Some investments are available only to accredited investors, but there are a lot of investments available to non-accredited investors. The syndicators need to understand the investor interest and experience. What have they invested in the past? And what are they interested in investing now? They want to gauge the potential investment amounts. And this is crucial during this stage because the syndicators need to know how much money do their potential investors want to invest. And that helps them determine the size of the property that they will acquire and put together as a partnership. So then the investors might review a representative summary of what the target investment will look like. What are the target returns? What are the investment amounts? What's the time frame? How long are they going to hold the property? And investors will then make a soft commitment of how much they might invest if the right investment becomes available.
Yeah, Mike, that's the first step, and that's primarily what we do in conversations with people like you. We're also out there looking for finding and securing a property that's going to make sense, and we put that property under contract to purchase it. There's a short timeline from that till when we have to close on the property, and be aware of that as a passive investor, that we're under a lot of pressure to get this property closed so we can own it. We're going to be doing a lot of due diligence during this on the property, comprehensive inspections of the physical inspections of the property, market analysis to make sure we've done that correctly, rigorous financial assessments to ensure that we really know that this is the right investment for us and our investors.
And during that time, once the property is put under contract, then the syndicators will also go to a SEC qualified attorney who will start preparing the essential documents. And this will also take a little time. So the documents include the private placement memorandum, which reads much like a mutual fund prospectus. It seems lengthy, but it contains a lot of details about how the partnership is formed and how decisions are made and what the business plan is. And then you have a limited liability company formation papers. So those will have additional documentation.
Yep, there's a lot of official documents that we need to prepare as the general partners, and we'll present them when we get them prepared. We'll present them to you, notify you that this investment is available, and invite you to get those documents, take a look and read them, review them with your attorney, with your accountant, with your uncle, whoever it is, and see if this is something you want to. Lots of details, as Mike is shared there, and it will spell out how this investment's going to work for you. At this point, we're going to want to know, are you interested in participating in this particular investment?
And once you review those documents and make your decision, then you can commit by signing the legal documents and wiring funds to the designated closing attorney or the title company. The clock is ticking, so some investments go quickly. I've missed out on some opportunities because I was not able to make a decision fast enough. And some of these close within 24 hours, others may take a couple of weeks. And during that time, then the general partners or syndicators will provide regular updates on the funding progress and the anticipated closing date. Then the syndication will purchase the property and ownership is transferred to the syndication partnership.
Yeah, and that's when we own the property, and it takes a little bit of time there, but we have to get all those funds together, get all the documents together, and get it closed so we can own it. When we own it, we're going to proceed to hire a property manager for the property. We're going to be making strategic decisions as the general active partners. You don't have to make those decisions. We're going to be making decisions about property operations, about renovations, about lease terms, and a whole lot more. We're going to act as the asset managers. We'll keep you informed throughout month to month, quarter to quarter, year to year in which we own this property together. And as we take that responsibility of running it well on your behalf, we're going to keep you updated on the financial progress, on the status of renovations, etc. There may be dividends or preferred returns that might be distributed this time as well. That's going to add to the overall returns you get as an investor.
And then there will come a time when the syndicators have decided that they need to make a decision regarding the project's future. Is it time to sell or do they need to recapitalize? And this may be dependent on whether certain metrics are met. Will they get a certain return for their investors? Has the property increased enough in value? How have the renovations been done? Have they turned all the units they wanted to turn and obtained the rent increases, increased the performance, the net operating income? So if the decision is made to sell, then the property is put on the market. And when the sale takes place, the proceeds are distributed to all the partners after settling with lenders and addressing any outstanding liabilities. So if the decision is made to recapitalize, then a new loan might be obtained and the general partners will continue to operate the property as the asset managers. Some capital might be returned to the investors, and then the sale of the property will later mark the conclusion of the life cycle.
So there we have it. And it probably raised more questions than we gave you information, but we wanted you to know what steps you'll be going through when you decide to get more informed and even to start investing in a multifamily apartment complex through a syndication like we've talked through here. We encourage you to keep learning. We invite you to get in touch with us and we can answer some more questions that you might have. We encourage you to read books, to go to conferences, to get to know people who are doing this, people in your local real estate meetups. Next week, our title for our last of these blogs here is You Are a Master of Your Finances. We'll see you next week. Bye-bye now.
Thanks.